Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and today's webinar is focused on strategy, and we're going to take a look at the Forex market and perhaps some other markets as well on today's 9th of December webinar. Before we dive into the topic, though, and the markets and take a look at price action, be aware that this webinar may not be suitable for everyone. It is visible for a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com. Take a look at conditions and details there by selecting your country of residence and contacting the appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty. So let's take a look at the news events for today. We have a wide range of countries releasing some news events, as you can see, all the way varying from Germany to Brazil, and from Japan to Switzerland and India and the US. And there's an interest rate decision on New Zealand, for instance. And I think Swissie also, maybe not today. No, Swissie has an unemployment rate. Probably that's a different date. Maybe that's tomorrow. Also, the pound has a big event tomorrow as well. All right, so be aware of that. Other than that, if you're interested in taking a look, before we dive into the market, just one more note, two more things actually. One, take a look at our blog. That's being released on Sundays and Wednesdays, roughly in the afternoon. So if you're interested in some sometimes interesting or sometimes funny perhaps things, then take a look at the blog. 5 trading myths you don't need to lose sleep over was the last blog from Nennet. We once a week. And for me, we wrote it together, but I had the lead here on 5 jobs that can make you a better trader. For instance, how to overcome 7 deadly trading sins. So take a look at that if you like. You can find that by Analytics and Traders blog. Last but not least, as mentioned yesterday already, Admiral Markets released a new feature, a new addition to MetaTrader 4 Supreme Edition. And there were already a lot of features, but there have been a few features added, such as a pivot point and Renko and high-low indicator, and that might seem very simple, but some traders have difficulties adding those tools, so that's already good to have it on it without having to do it yourself. And there are also some additional new things like time left till the next bar and basically using trend lines as stops and exits. All right, so that's good. And very useful additions and even more variety in the Supreme Edition. So take a look at that. Really very, 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 very useful and highly regarded by customers, traders, and the entire Forex market, in fact. So take a look at that. You can find that by going to trading platforms and then MT4 Supreme Edition. So yesterday we were taking a look at a lot of these majors and currency pairs. One of them was the Euro odd, and Euro odd was also showing an impulse, a break of the triangle, and then a break of the bull flag here, and showing continuation, and was heading towards the minus 272 target, in my opinion. So obviously, when it broke this bull flag here, that was a good moment. But we were looking at the market here yesterday, and I was looking for a good solid close of this hourly candle, and that happened. So the plan I mentioned yesterday was that I would look for a move back to the 50 fib with a stop loss below the candle low up to the target of minus 272 and minus 61.8 confluence there. So you can see that price did challenge it pretty strongly, this low, but didn't break the low. Stop loss did not get hit, and price bounced off the 88.6 fib. I had an entry at the 50, but that's okay. Sometimes it can go a bit deeper. That happens with fibs. And price then, however, luckily rebounding and that closing for profit. I had mentioned the TP yesterday at 150.20, which was about roughly 75 pips take profit, and the risk was roughly around 39. I think it was about 76 actually, to be very precise. So it was almost a 2-to-1 trade, almost. All right, so that worked well. Did anyone, by any chance, trade this setup that was mentioned yesterday? Just curious. If not, no problem. There should be more setups in a week than that, but anyone trade this one? Yes, no? I guess not. Okay, no problem. That can happen. So I think that, as I said, no big deal, but I was just curious. This one worked out well, and now I think price could be in a bit of a corrective zone here at the minus 272 target. And price basically kind of pausing here. So that could be a moment where price makes a bit of a dip, a bit of a retracement, perhaps before moving up again. And that's where price action is very important. Price action, in my opinion, is important because there are certain levels, zones where price is in a decision area. This is a decision area, right? Price is at the minus 272 target. Will it consolidate here and then break to the next target, or will it correct lower before maybe bouncing back somewhere here in support? Anywhere where price has to really show its direction is a decision spot. And then what I tend to do is wait for price to tell me, give me the information, whether it's indeed bouncing or breaking. For instance, in this case, this 4-hour candle clearly shows that it's breaking this decision spot, this top, right? Here, this particular price action, I don't know, is maybe not the best example, but okay, could indicate that price is maybe bouncing off these fibs. Just to give you, this is more hypothetical, but uh, just to give you an idea, that I use these trend lines, I use these fibs, moving averages to indicate what to get an idea what levels are important. That's why yesterday when price was about halfway here, halfway the break of the top and halfway the target, that I knew that this was not the decision spot when it was halfway. It still had space before it will run into maybe some trouble. That's why I was still okay with trading it to the upside. But I did want a bit of a pullback because of R2R considerations. Now it is at such a decision spot, and then it'll be interesting to see how price reacts to this. If we get a candle, for instance, like this, now, then that probably indicates the break. And prices then, if we get a candle like this, that's the break, and I would look for a retracement of that candle, and I think that there should be space up to the next target. So this is how price action can give me information about which way it's going and whether it's going to break or bounce. And in this case, if it pushes to the upside, it's breaking back into the trend. And if it respects this minus 272 target and starts to retrace lower, then that's a bounce down from the minus 272 target. So if this candle turns out to be like an engulfing bearish twin, then I would be more inclined to look for a small retracement before shorting it with a target. Well, target, let me think about the target for a second. Target probably around 149, probably 148.75 here. This is my 78.6 fib. Now that's a bit difficult with trading reversals because there are multiple support levels that can actually stand in the way. So it's a bit more difficult to find a good target, I would say, because any of these fibs could be a bouncing spot, but probably that's the best one. All right, let's take a look at the euro dollar. And I talked about this too, that price should not break. I would not want it to see break these bottoms, I said. Otherwise, the upside is potentially in danger because it could be breaking down to the next fib, to the 50 fib. Price stopped at the 38.2 fib. When we put the fib from the very bottom of this impulse to the top of this impulse, let me correct that a bit here, like that. All right. And the price, as I said yesterday, slowly but surely correcting to the downside like this, bouncing off the 23.6 fib here and the 38.2 fib here. And if it were to break through this support, then it could have fallen to the 50. It didn't break through that support. And as I said yesterday too, that here I would like to see a bounce back down to indicate that price is respecting this bull flag. That's what I was looking for. That's why it was already calculated that the break will probably happen in New York, which indeed happened about New York Open here with this candle. That was a good breakout candle. As you can see, the 1 hour candle here towering above the trend line. And that's what I was looking for, was this kind of dip here and move up again. And then the break. So now you can see it very well, I mean, visually very well here on this chart. Right? Now this break was a good candle, was a sizable candle for an hour candle. The candle close was near the high. And I would say that certainly qualifies as a decent candle. Now, putting a fib on that candle and waiting for a bit of a retracement to the 50 or 38.2 fib would have given an entry about 108.80. And the stop loss could have been below here, safer, or below the candle, a bit riskier. Now at the moment, price has moved about 35 pips away from that area, but it took quite some time before that happened. And price is pretty choppy as it moves up, which is a bit disturbing perhaps for those that are in a long, because it's not moving up that fast. Now, maybe that's not so surprising considering it was Asian session and end of New York. And by the way, it is recorded. Sorry, I forgot to address that. It is recorded. So at the moment, anyone who's in that trade, I would recommend to put it at break even, because or at least go below this bottom at 108.75, and it will be almost break even. Because if it breaks this fractal or this one and the trend line, then we might still see price move to the 50 fib. Like that. Because ultimately this is looking like a bear flag. Not that there was a lot of momentum here, but it could still be in a BC correction. And then price could bounce off to 50 probably. So although this was a good breakout, where I have the green arrow, as indicated yesterday, doesn't mean that the breakout will for sure push higher and must therefore reach the minus 272 target, like what happened with the euro odd. That still remains to be seen. So if it breaks through below 108.70, there's a good, I would say, a good probability it could fall further, perhaps down to 107.50, which is the 50 fib. For the upside really to have stronger kind of chances of success, I would like to see price expand this channel. It's a very tight channel. Price really needs to break above it, hook back probably to it, and use it as support roughly for an impulse to the upside. So that's why I think that there's no trade at the moment, unless price breaks, pull back, and then continues somewhere in here. Or price breaks this channel, makes a small hook back, and then maybe a short even down to the 50 fib, somewhere in here. As you can see, I'm not trading it now unless price really breaks to the up or downside. And for those, what I will do is from yesterday's trade setup, I will move it to break even. It's just that I would think makes sense to take that risk off the table and get a free free trade here, a free ride potentially. So I think that's really all that is to say on the euro dollar. Um, will it accelerate above the channel, or will it still correct one more leg lower to the 50 fib and then bounce? And I think that those trend lines are the decision levels, the key levels, the important zones that will indicate or answer that question. And it depends how price will react at these lines, whether I will trade it or not. So this is what I mean when I talk about decision levels and price reacting at these decision levels. And yeah, basically, it's a combination of estimating and understanding which, yeah, in my case at least, which fibs and trend lines and moving averages are key to my analysis, and then waiting for price to get there, and then waiting for price to respond, and then anticipating, and then joining the winner, basically anticipating that zone, and then riding along with the winner. That's using price action, I think, in its smartest way possible. Now, of course, you can. In some cases, I do anticipate a certain move prior to it responding. For instance, here, for instance, a 38.2 fib, yeah, occasionally can be very strong. Any fib can be very strong. So sometimes it's worth it to trade it right at that level because the confluence is strong. It's just a high probability the price will react to that. So in that case, sometimes I don't wait for a reaction like this bullish candle and retracement. And excuse me, and occasionally it could be a big difference. In this case, not so much, perhaps 35 pips, which on a 4-hour chart is not much. Right? So that's the difference between trading at the decision level at the 38.2 fib or waiting for a reaction at the level. All right, so this is day 4 after the big Thursday bullish candle. So I'll give it still a few days to break this top. Let's see if it happens. The upside needs a clear, strong candle here or two, pushing through and a retracement and an upside bounce. All right, back to the pound. Pound dollar actually did the opposite. It broke through the bull flag and 50 fib. Yesterday, good morning, by the way, Beverly. Good to see you. Did you trade the Euro-AUD? I was talking about the Euro-AUD at the very beginning of the webinar. I'm not sure if you saw that part. We're talking about yesterday's trade setup idea on the hourly, where we put the fib on this candle, this breakout candle, with the 50 entry. I was just curious, maybe you traded it by any chance. Pound actually did the opposite. Okay, no problem. Pound, as indicated also yesterday, is that when price is retracing back to these fibs, it can break or bounce these fibs, right? They can bounce at these fibs and continue with the trend, or break through them and then retrace deeper. And it can basically do that with any fib, of course, as long as the fib is drawn properly. Now, in this case, maybe not the best example, but roughly stopped at the 23.6 fib, then broke below it, then stopped at the 38.2 fib, then hit the 50 here and then broke below the 50, moved down to the 61.8 and accelerated down to the 78.6 fib. There's always the most space between the 61.8 and the 78.6 fib, as you can see. But depending on the time frame, the zones between these fibs can be big. On this hourly chart, they're not massive. But still, a break below the 50 down to the 78.6 fib caused a 70 pip fall, as you can see. With a small little kind of pause here, as you can see this hourly candle. On the 5-minute chart, there would be a pause, but we don't see it here too well. So in this case, we didn't get a break of the bull flag to the upside, but a break of the bull flag or channel to the downside. And a break of these fibs and acceleration down to it, and a very neat hit at the 78.6 fib, as you can see. All right, so yesterday we were also talking about any of these fibs could be bouncing spots. And look at that precision, right? That's, for me, quite normal, actually, to see something like that. But I don't know, if you're not used to using fibs, then that might seem pretty cool. I don't know exactly how often you've used fibs and seen it work so precisely, but this is definitely very, very typical for fibs. And it's not always like that, obviously, but certainly not a surprise. So beautiful hit on the 78.6 fib. Now price is back again, roughly in that zone of resistance of this trend line. So what I would like to see is price respect this zone and break after that, just like the euro dollar. Then I would be interested in a breakout to the upside. A continuation of downside, I would probably, let's see, not as interesting to me as before, because price has already retraced very, very deep to the 78.6 fib, which means there's only one fib left, the 88.6 fib. And although it could retrace back down to that fib, the chances of it doing so are surely steadily less than when it was at the 50 perhaps, because just statistically speaking, 78.6 is already a very deep fib. So there are not many cases where it will retrace deeper necessarily. I mean, this is already a pretty sturdy retracement. So I think there's a good chance of a breakout happening. But if price maybe, let's see, if price probably have to re-break below the 150. Maybe hook back to that 150 and then fall to the 88.6 fib. That could be maybe the only short, I would say, interesting here. The other potential is if price does break above this trend line for a breakout up to 151, perhaps with an acceleration up to 152.25, which again, that could be a resistance spot for downside. So to me, when I look at this, this is kind of the roadmap I see for the pound USD. We're getting close to a bullish zone and breakout. That's the green arrow. Below 150, downside potential to the 88.6 fib, which is then again a bouncing potential at the blue arrow. There's also a blue arrow above the green arrow. That would be the extended breakout potential. And then again a red circle and a red arrow at the minus 272 target. So when I look at a pound USD personally, what I see when looking at these tools, these trend lines, moving averages, and fibs, is several decision spots where at certain levels a bounce or break seems more likely. All right, if you have any questions on that, let me know. or on anything else. Let's see. Yeah, if you're Beverly likes to trade the euro dollar, euro pound, or pound dollar, and sometimes euro yen. Well, if you're, I don't think. I mean, it's really up to you. If you feel comfortable. I mean, if you think that you have enough subs like that and don't have to stress about chasing the market, let's say, I really don't think there's anything wrong with just sticking to those. It's good to trade something you feel comfortable with and know well. There is an advantage indeed of expanding some pairs is that you just maybe can be a bit more picky about what you trade, and that is maybe an advantage. So, okay, perfect, understand. Yeah, got it. Oh, that's already quite a wide range indeed. Otherwise, I don't think there's anything new to discuss compared to yesterday. Yesterday we were talking about this channel, by the way. I don't know for those that maybe didn't join yesterday's webinar. Um, this is a downtrend channel, and the downtrend channel kind of got changed somehow, unfortunately. We readjust that here. Good. So this downtrend channel, talked about that yesterday. Take a look at the webinar on YouTube, Adam Walker's YouTube channel to find all the webinars actually uploaded and other videos you can find there as well. So that's pretty cool. You can look back and look at educational content, set up webinars, videos. So there's a lot of things. I would definitely recommend take a look at the YouTube channel of Admin Markets. I think it's really really great. And for that matter, maybe if you're looking at YouTube already, you can take a look at uh, my own channel as well, which you will find. Basically, it's Nanette and my own website, and all you need to do probably in YouTube is go to Elite Currency. I'll just write the website. All right, so we also have a lot of videos, and so if you subscribe to Admin Markets and the website of Nanette and myself, EliteCurrency.com, I think you'll really have a lot of added value you can find with those videos. My humble opinion, of course, I'm biased, so but take a look if you want. So otherwise, with the pound USD, um, I still think that there's a good chance of that breakout to the upside. Even if you just look at this daily chart here, we're in that lower quarter here, right? So it's more of a bouncing spot, I think, at the moment. Unless it really accelerates below 149 or breaks below 149, I think it's more of a bouncing spot, even though it's a downtrend channel, as discussed yesterday. All right, dollar yen. As I said yesterday, it's not really appealing to me. Yesterday it was somewhere in here, still continued with a three wave like that. But if you look at a 4-hour chart like this, that to me does not seem appealing. Others might be very interested in it. I don't know. It's possible. Obviously, there are some potential trades to be found when price gets to one of the two extremes. But now it's still halfway. Now, even halfway, sometimes we can find trades. Here's price moves lower. I mean, here we saw some consolidation before moving lower. Here before moving higher. I don't know, but I am not a big fan of this particular. So, Beverly has a good question. Well, if it goes back to the bottom, would I look for a long? Well, I'm not a big range trader, so probably not. But I do think it makes sense if you ask me in like from an analyst point of view, I would say, yeah, it could be a good bouncing spot. Will I trade it? I really don't know. It could happen obviously, at the times that I'm not looking at it. But I'm not really jumping for joy. Unless there's really nothing else to trade, maybe. But I would prefer other setups. But yeah, it is a momentum up. It is a sideways zone, so positioning oneself at the bottom, I think, could never hurt. Even if it breaks, I mean, that's just tough luck otherwise. Now, what kind of reaction can we wait for would that be interesting to trade perhaps? Let's take a look. Oh, all right. Here, of course, these are not trades as yet because there was no range at that point. But here we see, for instance, two bullish candles. Those could have been signals. Here we see engulfing twins. That could have been a signal. Retracement halfway, for instance. Here, the retracement halfway would have been a lot further in the future. That could have been again another signal. That pin bar right there. Here could have been. Here's was bullish price action, and here was bearish price action. So something like that, I would say, is a decent 4-hour candle, like this one here, or this one, or this one, or this one here, or this one here. Basically, a close near the opposite direction. Close near the low in upside examples, close near the high in downside examples. And a decent sized candle. All right, the Aussie, we were talking about it somewhere in here, I think, that this is a bouncing spot. Price moved a tad lower still before hitting the 88.6 fib, 88.6 fib. And there it bounced. It showed engulfing twins here. And this could be a hook back for one more upside, I would say. Now, there's something else that's going on, is that there's momentum, and this is slow upside so far. So if price does break, I would say below 72 here, there could be the breakout to the downside. And this could be a small bear flag. So when price dips down to 72, it's going to be the moment of truth. Will it bounce and make a hook back for more upside like that with a larger correction up to, for instance, 72, what is it, 75 here, this bottom? Or is it going to break and continue with this downside momentum? All right, just thinking about how many candles here. 1, 2, 3, 4. This is the fifth candle. So if the next two candles do not break this bottom, then a bounce is becoming more likely, according to my rules at least. So that's something to keep an eye on. 1, 2 more candles. Now, if price does bounce, we'll certainly keep an eye on this level as a resistance spot, just in case it does make something like that. So this could be just a small bounce perhaps. But a small bounce on the daily chart could still be a lot of pips on the hourly chart. Kiwi respecting the 61.8 fib. Didn't like the Kiwi yesterday that much, but ultimately price, kind of bouncing off of it. But all in all, pretty choppy here, this 1 hour chart. Still not a big fan of it at the moment. Well, if it breaks, yeah, there's a trend line right here. No, I'm not that fan of trading it to the downside with support levels too close by at the moment. Trading it to the upside, it's the same like the Aussie. In fact, here's momentum, and this could be a hook back. Another 1-2 candles are needed for that, or at least a break above this. Either one probably. Break, pullback, and it could be a continuation like that. Downside, too risky with support close by. So it seems more like a bullish bounce potential, but either a bit further down the line, 1-2 candles, or if it breaks this resistance. But I'm not, I'd rather take a look at other pairs. Let's see. Dollar CAD. Yesterday I was talking about a retracement here for further upside, and that didn't happen. And price broke above this consolidation zone here and continued higher. And that's something we did talk about, that is possible like this to break above and continue to the target. It's not really something that I was really explaining into detail, I think, and I I didn't specify any, I think, setup here for myself. But indeed, did mention the 21 EMA is going to be probably very powerful because of all these candles staying above the 21 EMA band. The more that stay above it, the stronger it is. So now it's back to the 21 EMA band. And it could be a bouncing spot because of that. All right, let's double check everything here quickly. All right, enough space to the upside. And you can see that yesterday's follow-up bullish candle was nicely after this one. So I think using yesterday's low is good, 134.87, but that's maybe pretty far from here. Price hit the minus 61.8 target, as you can see, very nicely. It's quite an extended move. Makes the stop loss not as easy, indeed. Well, the red line is another advantage of using the stop loss there, is that this is a consolidation zone and could act as a bounce. There's a 38.2 fib, a 135 round number. So there's a good chance that price will bounce off that and therefore not touch the stop loss there. So any longs now or at the 23.6 or the 38.2 fib would be better used to use a wider stop loss. Now, if price breaks above it, hooks back to the moving averages, and then bounces again, then using probably a tighter stop loss, roughly around 135.50, makes sense as well. Because then a tighter one is okay because price is already showing its continuation momentum, its continuation of the upside. So those are my opinions on the stop loss. Alternatively, a stop loss could 4 hour. I mean, this is a strong 4 hour candle, so that could also be used as a good stop loss placement. Let's see, 135.25. Break of that 4 hour candle is not necessarily something that should happen. That could also be a good one. All right, regarding entry, it could be now, in fact, right here, right now. But I probably would rather wait for. I would probably wait for another 1 hour candle to tower above it, like this, and then a small retracement of that hourly candle, and that could be the bouncing spot, I would say. There is already a strong out or a decent hourly candle here and a retracement of that, so it could be now. And I try to think it's possible to consider an entry now, in my humble opinion, with a target with the stop losses, two potentials there, and target at 137, just below 137, 136.90. Trail stop could be good. Trail stopping the 1 hour fractals, because the point is that now this, as soon as it breaks this top, this upside will probably be a bit choppier, and there will be divergence between these tops. So using a trail is good to lock in, to reduce the risk, then lock in profit, and not get caught in a reversal, as this might hit the 272 target. Even a TP at the 272 target is good, but if it misses the 272 target, in fact, by just a tad, and starts to retrace deeply like this, and starts to make an ABC correction, then it's good to use a tighter trail here, so we don't get awkwardly stuck in a trade like that. That was first going our way and then dramatically turns against us. Perhaps we've all seen those happen, I guess. So for me, an hourly candle like this would be great. Now or next hour, doesn't matter. Then a bit of retracement, and that could be a good bouncing spot. That could be one bouncing spot. The other bouncing spot could be when something like this happens, somewhere in here, SM price, and then you got the moving averages turning up like this. And a renewed bounce off those 21 EMAs. A second bounce, basically, not the first one. That could be good too. Euro pound making in a way a head inverted head and shoulders here. It's going to be interesting. I don't see any setups here. I'm certainly curious whether it's going to break this resistance and make a bigger correction up. And let's see, 4 hour. Were you looking at the dollar CAD? Is that the dollar CAD, Beverly? Or the euro pound? Ah, here, this one, right? Yeah. Yeah, using a tight trail is good. I think here, this is the fourth candle. This was a strong momentum to the upside, and we're still in that momentum because 5 to 6 candles have not failed to break this top, which means it's still momentum territory, and that's good. So as long as it pushes and breaks this high within the next 2 candles, I think that everything is doing well for this upside. Another thing to consider, besides a trail using hourly fractals or even 4 hour low. Now a pin bar, I don't see a pin bar as yet. I mean, I can understand that this could become one, but it isn't closed yet, so I wouldn't count it as yet. But your chart, it could look different, right? And it could be already present there. Um, if it does close something like this, I would consider it a something of a positive sign. Indeed, I wouldn't really think it's a great signal in itself because it's such a small candle. That's the disadvantage. But yeah, yes, exactly. You Beverly already mentioned it. Actually, I see it now at the bottom. Yeah, true. Might be a bit smaller size, but yeah, it is. It is still something to consider. Still a nice bonus to have in the pocket. Nice confluence, let's say. And but I think still a main reason here would be the hourly and the impulse correction and the likelihood of a bounce. All right, Euro yen folks making a range at the 23.6 fib and didn't break below it, stayed above it, just going sideways, kind of oscillating around the 21, then broke above it, then broke back to it, and now bouncing. Now this is a typical. This is what I was actually talking about when with the dollar CAD hourly chart. That this is the first breakout here. That candle right there. That's the first one. Then you get an upside, and you get a hook back to it in a second break. Now the dollar CAD is somewhere around here where I have the red arrow. The dollar CAD hasn't broken above the 21 EMA. So one option is trading it when it does, which is the first green arrow. The second option for the dollar CAD would be when it breaks again above the 21, whereas the second green arrow. So now you can see what I mean in a real life chart. So with the euro yen, I think that a long, based on this candle here, was a good idea. Still some space up to the resistance. Respect for the 23.6 fib means strong, that the bulls are in control at the moment at least. And there could be some upside and retracement and continuation perhaps. But there's enough space here to, if it hits this resistance, to move it to break even. All right. Now that entry was around, if one takes it at the close, around 134.07. It's like halfway around the 133.90, and it's up 20 pips at the moment. Now, if someone is not in that trade, then I think waiting for this candle to close and waiting for a retracement of that candle still makes sense. To about the same level, 103.05, 103.04, I think, should be okayish. A hook back basically, and I would say a stop loss below. I would still go with the stop loss probably below these bottoms here at 135. 80-ish. The other option could be 135.73 below this fractal basically. target could be 134.48, 50, or excuse me, or higher at 135, or even 135.75 ultimately. Now, I do realize the situation that price is pretty close to this resistance trend line. So being maybe a bit more cautious with the TP could be prudent. It could be better. Aiming for too high could get us into trouble, I think, because otherwise price could fail as it hits this trend line and doesn't even hit the 272 target. All right, pound yen. I'm not sure. I think where were we yesterday? I didn't like the pound yen that much, I remember. But it actually still accelerated a lot to the downside. That could happen with the pound yen, doesn't it? Made a big fall still. I didn't see any sort of buy. Like there was this trend line break that already had happened. So sometimes if you're in a trade like that and you successfully trail it, you can really get a beautiful acceleration sometimes. That's an advantage of a trail. That does boost the reward side of things and makes the R2R sometimes very pleasant. And those bigger wins from R2R perspective can be very useful. So that could happen sometimes if you trail it. And in this case, when we were looking at it here, I didn't think it was that interesting. But it did continue a lot lower. And it's kind of like an expanding wedge almost. Or maybe it is that. Let's see here. A, B, C, D, E. That could be one way. That would indicate more downside like this probably. Down to the 272 target. The other option could be A, B, C, D, E. Let's see. Seems less likely, but in that case, price could get up to 50 fib, which is a big resistance spot with this trend line here and this trend line here. These two fibs. In that case, price has a lot of space to the upside. All right, let's take a look at this fall. One, two, three, four, fifth candle. So if this candle posts something like this, I think it is a good indication of a bounce. Small little pullback here into that candle could be enough for a renewed bounce continuation, at least up to the 50 fib, if not the 61.8 fib, I would say, as a conservative target. But it could go higher, as we already saw. Ooh, your odd looks like it's pushing yet again, and that could be a continuation signal. 20 more minutes to see how this candle closes. If it's something like this, I think it's already pretty decent. It would be nice if it can push through this level and close above it with a close near the high. In that case, that looks like a good breakout candle, a bit of a hook back down to the 7.2 target. Could mean an acceleration and continuation of this uptrend. All right. Otherwise, anything else interesting? Do you have any ideas regarding a trade setups, perhaps on a pair we already mentioned, or maybe a pair we haven't mentioned yet? Anything interesting in your opinion that you would like to share with us? Just mention the currency pair and time frame, and whether you're bullish or bearish. And if you have a particular reason, a particular tool that you're using, you can add that as well in the chat. We can take a look at that. This is a bit of a whipsaw here. Bullish, bearish, bullish, bearish. But ultimately, I would say that probably from a price action point of view, it looks like bulls are regaining control after a pretty nice down momentum. And this trend line is about to break, depending on how this trend line, this candle reacts. There's some layers of resistance up in here though still, but it does look like it's about to break. I think yesterday we were talking about this trend line already and saying that it could bounce here. And it did move a bit lower, but what I didn't like was this zone. That could stop it. So I didn't like the profit potential there. That's why I wanted to hook back as it breaks, a hook back to the same breakout level, right? Before getting a downside. So that basically happened here. Oh, here was the break. Here was that hook back I was talking about. And then there was enough space to that zone. Because then at that point we were talking about roughly 80 to 110 potential there. Versus roughly about a 55-ish risk. So that was okay. And you can see that price did use that zone, which I was really worried about because of the supply demand here. And I used it once, and you used it twice. So that was a good short potential, and it could have also been used for an upside potential even. And now it seems to be breaking. The only thing is that I wouldn't use an hourly chart for this trend line, because the reason is, well, it could be okay for this trend line. Let me make it a bit different color. For this pink line. This pink line, that would be okay. Because in that case, price is definitely breaking above it. But we still have a pretty hefty zone here. I would be cautious of that. This trend line is a 4-hour trend line. And I would like to see actually probably a 4-hour or daily candle break above it. So probably what I would like to see, ultimately I would like to see probably a daily candle, something like this, push above those red lines, close near the high, close above those red lines. Tomorrow see a bit of retracement about halfway or to the 38.2 fib. Put a fib on this daily candle like this. Wait for retracement back to 227 to 2.267, and then look for a bounce up to the minus 272 and minus 68 target. And look for basically a break, pullback, and continue. That would be my new idea for the pound New Zealand. So yesterday there was short bounce potential, and now there's a breakout potential. But I'm not sure if I really want to trade this breakout, unless it's a very minimum, it has to have a 4-hour candle like this. On a 4-hour chart, then a retracement of that 4-hour candle, and there could be a continuation today. That could be a trade. And then tomorrow we'll get another retracement probably, and then again a bounce like this. So ultimately there could be a small one here, and tomorrow a bigger one. Doesn't have to go to the 50 fib, it could go something like this. to the 38.2 fib. Something like this is what I would be expecting for the pound New Zealand. Now, obviously, if it breaks below, for instance, a trend line like this and breaks below the 61.8 here, then that upside is not probably going to happen anymore, or at least has a significant struggle at the very minimum, right? Now, pound New Zealand is something to be, of course, it is a bit, yeah, it's a bit more expensive, obviously, because of the spread. But if there is a decent zone available, then it's still okay. All right, pound CAD talked about the potential break of this resistance level. And yesterday we got it. Daily candle closed above it. There was some struggle here, but ultimately we broke above that. So it looks like a good breakout at the moment. Using the same kind of resistance level now as support, slowly but surely. So yeah, perhaps you're in that trade. If not, I think that let's see. Yeah, probably this 4-hour candle, this hourly candle was a good breakout candle. So that could still be an entry for next hour, not this hour. It's moved away too much. Entry here with the stop loss below this fractal. Or to wait for this 4-hour candle to close and wait for a retracement of that candle by putting a fib on this candle and letting price go back to the 38.2 fib with the stop loss below it. And the target, this is the 4-hour chart, sorry for this. Target could be 205. So let's see, a retracement of this 4-hour candle to 204.08 and stop loss at 203.63 would give about 45 pip stop loss. The target at 204.90 would be about 84 reward, 84 versus a 43. So it's about a 2-to-1. So that makes sense, I think. Still a small continuation. Like basically what happened with the euro odd. Will it happen today? We of course never know, but it seems to be quite similar. But I would like to see this 4-hour candle with a strong close. All right. Oil had another bearish day yesterday, now challenging the bottom. Very good, interesting how this is going to react to that. All right. I guess that is my 2 cents on the market at the moment. We got other webinars this week. We got how to manage your trade by profit stops tonight. Then it's going to take a look at different time though. This month only, by the way, 45 minutes later than usual. That will be 5:45 GMT time and London time. Tomorrow too, but then a different topic: building a Forex strategy from scratch, step by step. Also 5:45. Next week, same webinars as usual, same structure, recap, two live trading rooms, and then education in the evening on Wednesday and Thursday. Otherwise, besides the webinars, you got a lot of analytics here as well. Market heat map, talk about that often. Got the market sentiment, all kind of analysis. So something to consider. There's a lot of stuff here, and don't forget the MT4, the newest Supreme Edition. You can download the new version, and you'll have all those cool extra tools. Besides already the 50 plus that were already existing before that. And last but not least, don't forget the YouTube channel of Admin Markets and the website of Ned and I. We got a lot of cool bonuses as well that we provide, and we talk about besides educational stuff. So if you're interested, take a look. At the moment, the markets, well, let's take a look at this pound USD. Looks like it's respecting this trend line a bit. That's good. Would like to see a move down and up like that for a breakout to the upside. Your dollar seems to be indecisive. Need to see some momentum occur in the market here. Ooh, odd USD. Interesting. It's a decisive spot. Will it break and continue that momentum or bounce? And it's approaching this trend line with a lot of momentum. So it's really going to be interesting how it closes in 8 minutes from now. I would not trade it to the downside because it's right at the trend line. But I'm interested to see if we can get a bounce the next hour and see if we can get a rally here. But I wouldn't trade it on CLC, at least the bullish candle. The other opposite could be true if it breaks down with a bearish candle like this. Then I would be interested in looking for a pullback for shorts. So very interesting how to see how price action will respond to this trend line, I would say. Dollar CAD 2, price moving up. So anyone who took a long in here is up a few pips, but there's always the hook back. I think a good potential of a hook back. And the Euro Yen needs to have a good bullish close this hour, otherwise it doesn't make sense to look for a retracement. This is not a good close. This is a wick, but if it closes somewhere in here, I wouldn't mind looking for a retracement for further upside. Same for the Euro and the pound CAD on the hour and 4 hour chart, respectively. And pound New Zealand 2. Pound yen perhaps a bounce as well. Looks like several indications of pound strength perhaps when comparing all these. And be careful of New Zealand. By the way, indeed, today is the interest rate. So when I talk about the pound New Zealand, my first idea of looking at the daily chart makes a lot of sense, a lot more than the 4 hour, just because of the interest rate. That way, when you look at the daily candle, it will already have incorporated I think it should have incorporated already daily move. Now I'm not sure. Sure when the event is actually taking place. I'm getting confused with these time zones, but let me double check. But I think if the event should be within today's trading day. So in that case, today's candle should have it incorporated. That's why maybe waiting for this daily candle to be strong. Show a good close, hit a high close, perfectly above these red trend lines, red horizontal resistance lines. Could be the best approach. That answers, I think, Tico, your question as well. And I would like to see a close above this 2277, 80, something like this. Okay, that's going to take a lot of time to complete that candle, but you get my point. That, and I'll wait for a bit of retracement like this, and then the bounce of the breakout. Target probably, I think I talked about it already, but depending on where this fib is exactly, the minus 61.8 seems good. 230 roughly in this zone here, this small little supply demand zone here. This supply demand zone. That could be a strong level. Great. Rate is, thank you so much, Beverly. The rate is in 11 hours, Beverly is saying, which is, let's see, 11 hours. That should be today. Yeah, that's today. End of New York session. All right, I got some other comments here. Previously, let me. Yeah, I understand, Beverly. I can imagine it's that depends. Yeah, those times can be good or annoying, just depending on exactly the rhythm. My favorite trade plan for today is well, certainly we can knock out the pound resume because of the event. That could be good for tomorrow because of the daily candle. Uh, let's see which one is maybe the pounds. Something with the pound. I'm not sure which one though. Let me take a look. Maybe the pound CAD or probably the pound CAD because it's already in uptrend and it's breaking a, it's already in a sturdy uptrend here, consolidation. So I mean, 205 is really a conservative target. I think it could definitely break above 205 and head to 207 after that. But 205 could be enough to cause a bit of a retracement, though. Because the pound USD, the pound yen are more of reversal setups. Although the pound USD has momentum prior to that. All right. Let's see. That I think wraps it up for today. We've got 1 minute left till, by coincidence, 1 minute left. 30 seconds left before the hourly candle is closed. One question about this pound CAD, I think, from Beverly. Let's see. I would like to see a 4-hour candle like this close, personally, as bullish. I think I'll keep an eye on the 4-hour candle. That's probably the best. A close like this is fine, as long as it's not too away from the high. As long as it stays something like this, or improves, obviously, with the higher close, I think that's fine. And then I would look for a smaller retracement, preferably to the 38.2 fib. I mean, an entry at the close is possible as well, but I like a little pullback to the 38.2 fib probably. 50 is also possible. Target 204.90. Oh, I was talking about the 50 fib actually in about 30 minutes ago. I forgot. So anyhow, both are possible really. It's just that depends how much of R2R do you want to get. If you really want to get a 2-to-1, then go for the 50. If you don't mind getting a bit less, then 38.2 fib is okay. I think it also depends on how this 4-hour candle closes, because if the 4-hour candle has strong close, very strong close, within 5%, then I would go for the 38.2 fib. If it's something like this, then the 50 fib might make a bit more sense because relatively there's a slightly bigger wick. I know these are maybe very, in your opinion, maybe unneeded details, but that's how I would look at it at least. And that could help like identifying which fib is a bit more likely. So, and the other way could be just to look at RR or and yeah, or to split even the trade into two parts among the both fibs, as long as the risk stays the same. That could be a scale in. Of course, there's a chance that the 50 gets missed, but and the stop loss, yeah, I would go below this hourly fractal here, I would say, and the 4-hour low. About 203.65-ish. Now, another reason why we maybe don't get a big pullback is because price is now actually breaking the second time above these moving averages. I would therefore not expect it to go back to the 21 EMA band, in fact. It should kind of pull away from it, in theory. So I don't think it's going to go back to the 78 or the 61.8 fib in this case. So the very max should be the 50. But I wouldn't with a stop loss there, though. It's possible, but I would still rather use the wider one. All right. Well, I hope, fingers crossed. Hopefully that plan doesn't do all too bad. A trail stop loss, by the way, is always a good idea. If, for instance, price on the hourly chart doesn't break a high within 5 to 6 candles, that could be worth an exit for a small profit or big profit or small loss even. Using these 4-hour candle lows, as most of these lows will do pretty well. So especially if it's a big candle, that could be a good idea. And of course, having a TP at 204.90 wouldn't hurt, I think, but it doesn't have to be. But then you definitely use a trail stop to reduce the risk of a unexpected turnaround. All right, so that's my 2 cents. Let's see. Hopefully, it works out fine. And that will wrap it up for today. Thanks so much for joining. I wish everyone good trading. And I hope that you get some good pips today and this week. Be careful of the news events, New Zealand, pound, and I think Swissy was there somewhere as well. I don't trade the Swissy that much, so that's not really a big concern, but something still to keep an eye on when it does occur. Let me check the market quickly. Swissy. Tomorrow, indeed. Swissy and pound tomorrow. All right. And tomorrow and next week, of course, be careful of the dollar interest rate. But we'll talk about that as well on Tuesday with when we're back with the live trading room on Tuesday. And well, I hope to see you tonight and tomorrow too with the webinars. Cheers, everyone.